Hey guys, what's up? Alec back with the daily stock market, and look at that. The account is up $72,000, up $22,000 since August 5th, 2023. However, we are seeing a pullback in the market in recent months and recent weeks. So, yes, this video is going to be all about the stock market crash, if it's coming, what stocks are on discount as of right now, and the best stocks to be looking at, watching, and buying as of right now. We have AMD now down 34% from 2024 highs. We have Nvidia down 21% in just the past month. We have ARM down 40% from 2024 highs just in July. And for super microcomputer, we had them as high as $1,188 per share March 13th, 2024. They're now down 47% from 2024 highs. And you might have even seen my recent reel that I posted this morning. We have never been down 1,000 points ever intraday on the NASDAQ. Now's the best time to make money with options trading. We got pretty great views. It went a little bit viral. We had 50,000 views.
Some would call it history.
A few hours.
That's scary. Don't say that.
667 shares, 241 saves, and 36 comments in just a few hours. So obviously people are extremely curious about what's going on with the stock market dip that we're experiencing right now. And we actually saw the Magnificent Seven set to shed $1 trillion in value, led by Apple and Nvidia could be the biggest losers of the Magnificent Seven. So watch those two stocks. Apple and Nvidia led to a sell-off in technology stocks on Monday as U.S. recession fears and Berkshire Hathaway's decision to cut its stake in iPhone maker punctured a months-long rally in the sector. High-performing shares of Alphabet, Amazon, Meta Platforms, Microsoft, and Tesla fell as much as 12% in pre-market trading. Keep in mind the stocks that I talked about earlier in this video were more in the AI space, but technology as a whole is falling as well. And the Magnificent Seven stocks have nowhere to hide. They are the biggest targets for this stock market dip. Okay, we continue to read the losses in the Magnificent Seven stocks were set to wipe out nearly $1 trillion from the combined market value of these companies. Chip stocks, the big winners of Wall Street's picks and shoveled traders for AI, also tumbled, which we talked about in the beginning of this video, with Advanced Micro Devices, AMD, Intel, Supermicro, and Broad.com falling as much as 10%. The share slide followed by a weak U.S. payroll report on Friday that pushed investors to safe assets and spurred bets that the Federal Reserve will have to soon cut interest rates to aid growth. Over the weekend, Warren Buffett's Berkshire Hathaway said it halved its stakes in Apple, the conglomerate's top holding, in a stock selling spree that raised worry about outlook for the tech industry. And I did post that on my story on Instagram, so make sure you're following me on Instagram to be updated with all things stock market related, all the important updates in the news. We can see Elon Musk says Warren Buffett is clearly expecting a correction after Berkshire Hathaway sold nearly half of its Apple stock. So that's not a small sell, okay? Berkshire Hathaway's top holding is Apple stock, and they sold nearly half of it. So they're definitely expecting a correction. And there's lots of selling going on in the stock market and people sitting in cash positions and taking out puts in the stock market to protect their long-term investments. And if you want to know more about options trading and how to hedge your long-term investments and bet on a stock market correction and stocks going down, make sure you message me on Instagram. The #1 stock market family on the internet. It's as simple as just messaging me on Instagram to join. Meanwhile, Nvidia shares took a hit from a report that the launch of its upcoming AI chips could be delayed by up to 3 months due to design flaws, which could impact customers such as Facebook, Meta, Alphabet, Google, and Microsoft. So that's extremely bearish as far as the short term is concerned with Nvidia. There could be even more delays because of that hiccup in the future, propelling the stock in a downward fashion a little bit further. After driving gains on Wall Street for more than a year, big technology stocks have come under pressure in the past few weeks, also on signs that the payoff from hefty AI investments would take longer than some investors had initially hoped. Shares of Microsoft, and by the way, going back to that last sentence there, that could be very bearish for earnings coming up if they're not as profitable or generating as much revenue from these AI investments that these big companies expected to. That could be some bearish news coming up in 2020, the rest of 2024, and in the beginning of 2025. Shares of Amazon, Microsoft, and Apple, the three biggest providers of cloud computing services, fell as their earnings reported dashed big bets on hefty AI investments translating quickly into growth. Expectations have arguably become too high for the so-called Magnificent Seven group of companies. Their success has made them untouchable in the eyes of investors, and when they fall short of greatness, out comes the knives, the analyst wrote. So as far as the best ones to be buying and snatching up, I think AMD is a great one to have on your watch list and to be continuing to watch the stock price every single day. They're down 21% just in the last 1 month alone, now at $137 per share. They were sitting closer to $211 per share in March. And I was telling you guys back then, don't buy AMD yet. Wait for a dip. Wait for around $125, $135 per share. Start a position. Dollar cost average in for the long term. And as long as you're buying under $135 per share and dollar cost averaging in and long-term investing, then it's definitely going to be paying off. Personally, I want to be buying the most AMD stock under $100 per share. You can see I have two price alerts here. One for if it moves below $100 per share, and another one if it moves below 99.95. Basically the same exact price alert, but I just want to be double notified. So that's my price point for AMD, $100 per share or under, and I definitely think it can get to those levels. Super Micro is another one to be watching at $618 per share. Have it on your watch list. They're down 31% in just the last 1 month, and from highs they're down around 47%. Okay, so now is a good time to start dollar cost averaging in. You know, obviously we want to see them fall a little bit lower, under $500 per share. Dollar cost averaging in for long term. If you don't know about Super Micro, they're a good one to be looking into. They have a fair PE ratio compared to some of these other big AI stocks. They're one of the best AI stocks. If you're an AI investor, you definitely know about this stock, or you should have it on your watch list and you should be learning more about them. Market cap 35 billion, price to earning ratio 35, implying it is a pretty good deal at 618, but we want below 500 on Super Micro. ARM, another AI stock that's down 38% just in the past month. Again, if you're an AI investor, you should know them, or you should be learning about them if you don't know them. Okay, in the last year, they're up 121%. They were closer to $70 per share at the beginning of the year. I think under $100 per share is a great place to start a position. Dollar cost averaging in for long term. However, under $75 per share is the best place to be buying in bulk. Because as we scroll down, yes, they have a huge market cap, 120 billion, but look at that PE ratio. It's closer to 28. So they are a little bit more expensive than the last company we looked at, Super Micro. So I would be waiting for a bigger dip closer to 75 before purchasing heavy amounts of ARM. And as far as a stock that's not AI or tech related at all, that should definitely be on your watch list right now, down another 3.5% today. And in the last 3 months, they're down 22%. The last year, they're down 34%, is Nike stock. Okay, this is a 5-year low right now, a great buying opportunity. They're currently, they were in 2021 at $169, $177 per share, down around 59 to 60% from highs. Nike's a good one to be buying at these levels, in my opinion. They're also a dividend stock with a 1.9% dividend, a PE ratio of 19, implying they're a great deal, and a market cap of 107 billion. So they're pretty low on the market cap. Their market cap could double over the next 5 years. So they're definitely an interesting one to do a deeper dive in and do some due diligence and some research yourself, but definitely have on your watch list during these times. And as far as Apple, Amazon, Microsoft, Meta, and all those big ones, they still need to be falling a little bit more before I make another video about them. So maybe I'll make a video next week on those big Magnificent Seven stocks that really haven't been hit too hard yet. I still think there's more blood in the waters coming for those bigger tech stocks. But the last stock we're going to be talking about on this video is Tesla. Yes, they are part of the Magnificent Seven stocks. Yes, they are an AI stock. And yes, they are down 8.9% in the past week and 18% in the past month. Okay, remember, this is a stock that hit their all-time high in 2021. A lot of the other Magnificent Seven stocks hit their high in 2024 just recently, and it's been down from there. Okay, so Tesla never even got to experience that Magnificent Seven buzz that the other stocks really had. And they're still down around 50% from all-time highs in 2021 of $407 per share. I think dollar cost averaging in under $200 per share for long-term investors is one of the most important things to do in the stock market right now. However, if I want to buy a little bit heavier, I want to see that closer to $150 per share or under, especially if we see a sell-off in the market. It's definitely possible for Tesla stock to be under $150 per share. Like we saw in 2023, we actually saw it get as low as $113 per share. Now, I don't know if that's going to be possible again, but we're hoping for under 150. That's when I'll be buying thousands of dollars of Tesla stock at that point. Again, they have a 58 PE ratio with a market cap of $635 billion. If you enjoyed this video, leave a thumbs up and share this video with a friend. It really helps me out, a small creator like myself. And if you want to join my private trading group so you can see exactly what I'm buying, how much I'm buying, which ticker symbols, option trades, swing trades, expiration dates, strike prices, and everything in between, and you want to join a community of traders that are going to make you better every single day, then message me at the Daily Stock Market on Instagram. Now 234,000 followers, 974 posts. Click on Success 2024. Read through some of these positive testimonials. Hundreds of dollars are being made every single day to join our private trading group. It's as easy as just following along with our trades. We can see in the past month up almost 1,000% in the past month, their first month of trading. Okay, DM me if you want your account to look like this and you want to be one of those success stories for the daily stock market. Thank you guys for making it to the very end of the video. Share this video with a friend. Subscribe on YouTube if you haven't already. And as long as you keep liking these videos, I'll keep making them for you. Thank you so much to making it to the end. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.